Hello everyone, this is Jennifer. In this video we're going to look into money market. So what is a money market? So money market is a place which is for trading in money and short-term financial assets that are close substitutes for money. So it basically provides an opportunity for balancing the short-term surplus funds of the lenders with the short-term requirements of the borrowers. So it's a market only for short-term loans or short-term securities which is less than 1 year. And some of the important money markets are the London money market, the New York money market, etc. So what is the features of money market? They deal only with money and short-term financial securities which will have a maturity of less than 1 year. So what is the functions of money market? So the functions of money market are as follows. The first one is economic development. So the money market provides short-term funds to both public and private institutions. So these institutions need money to finance their capital needs. In other words, the money market assures supply of funds to such institutions. So the financing is done through discounting of trade bill, commercial bank, acceptance houses, discount houses, brokers, etc. The next one is profitable investment. The commercial bank deal with the deposit of the customers. The banks are required to put their assets into cash form to meet the directions of the central bank on the one hand, while on the other hand they put the excess reserves into productive channels to earn income on them. So it basically helps in channelizing your mobilization. The third one is borrowings by the government. So the money market helps the government in borrowing short-term funds at a very low interest rate. The next one, importance for central bank. If the money market is well developed, the central bank implements a monetary policy successfully. So it is only through the money bank that the central bank can control the banking system and thus contribute to the development of trade and finance. The next one, mobilization of funds. So the money market helps in transferring funds from one sector to other. The development of any economy depends on availability of funds. So no country can develop its trade, commerce and industry until and unless the financial resources are mobilized. The next one is self-sufficiency of commercial banks. So in the case of prevalence of the developed money market, the commercial banks need not borrow from the central bank. So in this case, the commercial banks have scarcity of resources. They can meet their requirements by recalling some of their loans from instead of borrowing from the central bank at a higher rate of interest. The next one is savings and investment. So another important of money market is that hence liquidity and safety and saving of investor and the investment. So the capital market. So we looked into the money market. So what is a capital market? So the capital market is just the opposite of money market. So it basically helps in facilitating and borrowing and lending of long-term funds. So it refers to an institutional arrangement for facilitating the borrowing and lending of long-term funds. So it is concerned with those private savings, individual as well as corporate, that they can turn into investment through new capital issues and also new public loans floated by government and semi-government activities. So what are the functions of capital markets are? The functions of capital market. So under capital market, so the functions of capital market are basically helping in capital formation. It acts as a link between the savers and the investors, meaning to tell they can mobilize the savings from the savers to the investors for a higher profit returns. They help in increasing the national income. They channelize the funds for a much productive resources, ultimately helping in overall economic development of the country. So the capital market, the components of capital market are basically are categorized into two different kinds of market. One among them is the new issue market or the primary market. So new issue market or the primary market is basically a market for the new issue of shares and securities. So the companies, both the new companies and the existing one, can raise a capital on new issue market. The primary function of new issue market is basically to facilitate the transfer of funds from willing investors to the entrepreneurs setting up of new enterprise or going for expansion, diversification, growth, or modernization. So what are the functions of primary market? So the functions of primary market are as follows. The first one is origination. So it refers to the work of investigation, analysis, and processing of new project proposals. So it starts before an issue is actually floated in the market. Second one is underwriting. So it is an agreement between wherein the underwriter promises to subscribe to the specific number of shares or debentures or a specific amount of stock in the event of public not subscribing to the issue. So they help in underwriting of shares. The third one is distribution. It is a function of sale of security to the ultimate investors. So the new issue market helps in distributing the shares of new companies to the ultimate markets. So the advantages of primary market are they help in mobilization of savings, channelizing the saving for productive uses, source of large supply of funds. They help in raising long-term capital, and they ultimately help in the rapid industrial growth. What are the disadvantages of a primary market? The possibility of deceiving investors. So meaning to tell, the corporate raises money through public issues, may not disclose detailed information in the prospectus in order to deceive the investors. No fixed norms for project appraisal. So the project for which money is raised are to be evaluated in terms of finance, economic profitability, and market feasibility. Ineffective role of merchant bankers. So merchant bankers perform most of the pre-issue and post-issue obligations with regard to new issues. Then lack of confidence among the investors on investing in new issue market because of the delay in allotment of securities or delay in refund of money by the companies. So the instrument in new issue market are basically two kinds of instruments. One is the ownership securities or the capital stock, which is nothing but the equity shares and preference shares. The second one is a creditorship securities, which is debentures or bonds. So moving on to initial public offerings. So what do you mean by initial public offering? Initial public offering is nothing but when the company issues the shares to the public for the first time. So initial public offering is a process by which a private company can go public by sale of its stock to the general public. It could be a new young company or an old company which desire to be listed to a stock exchange and hence goes public. Thank you everyone.